ericmuadid.com. It is February 3rd, 2016. Want to see whether we can find some leadership sectors in the market. And before I do that, first and foremost, let me prime this video by going to the weekly chart. In fact, let's go to the monthly for the S&P 500. Being the 3rd day of February, it's very early on in the month, but for now we are breaking through below 2015's monthly closing low for the S&P 500. That's at 1920 and change. So this is actually a fresh sell signal indicating the possibility of a much lower market. As long as it is holding below this, the risk for lower prices remains, as we've been discussing. We can also see here that we are clearly pushing to 3-year lows. That being the case, we always have to be very skeptical of any market rally attempt. And also we can see that the MACDs are moving to 3-year lows. So the risk continues to be that markets, generally speaking, are not acting very well. So that's very clear. And we take a look also at the weekly. We can see that for the S&P 500, after 2 weeks of rest, so we had 2 weeks of rest over the last 3 weeks, week number 1 and week number 2, after forming this low at about 1880 on the S&P 500 and change, which is here. Because we've had 2 weeks of rest, any fresh break would be a fresh breakdown. In other words, if we clip through, that's going to be good enough because we've digested this drop, held for 2 weeks, and now any fresh drop below 1880 suggests that that's a market with fresh legs to the downside. So we need to watch for that in case the market does crack through that. Now, because we are trading in a market environment that has been down, and in fact, let me take a look at my sectors here. If I take a look at the sectors in the market, it becomes pretty evident. In fact, let's go back. That's not the right. Let's go back here. Let me get, where is that list? Here it is. All right. Let it load up. And if I can just go through all these lists, you'll see that the sectors in the market are all at close to correction, if not bear market territory. All the sectors. In fact, all the 107 sectors all look alike. Let's just take a look at another page, and you'll see that all the sectors, because the market's been down, we are looking at all sectors pretty much trading lower without fail. And this now we see here that the Dow Jones Brewers Index, which we had discussed earlier, let's click on that and see what we get, is actually holding up better than other sectors in the market. Let's see whether that pulls up. Alright, so here we go. So this one is holding up a little bit better. But if we go and take a look at all this, let's click at any, like the solar ETF made highs in 2014. It's pretty much in a bear market since then. All the sectors that we look at have been down. Let's take a look. I'm just clicking at random sectors. Okay, here's one that US conventional electricity index is pretty much back in the trend. It's at least trying to break out. So maybe that's something we could also watch for down the road. Just gonna pick on another random sector, which is the semiconductor index, which is breaking down as of right now, together with the S&P, NASDAQ, and the Dow. So we are seeing lots of markets breaking down. But I wanted to share with you something that I've been watching, not sure what it's doing, but really the only sector right now, unless I'm missing a micro theme, is the GLD or gold. Now this is 3 years worth of data. So this is 3 years worth of monthly data. Right? And of course you know that, but what I wanted to show you here is why sometimes it's good to adjust it slightly. So because this is 36 months, you can see that on the 36 months time frame, the RSI is not breaking out to 3-year highs, which is our minimum requirement. We are looking at the MACDs right now. One of the MACDs is very close to breaking out, very close, if not at breakout levels. So we are seeing gold do something it hasn't done since 2011. Let's go back and take a look at, let's go back about let's go back 8 years just to see what we can. Okay, so we had a nice run off the 2003, even off the 09 levels or 08 levels. Gold had a run to all-time highs. Since 2011, of course, we've been lower, but now there's a chance that gold could be coming back in play. So rather than use 36 months of data, you can use 34. And so let's just take a look at what that means. When we can see now that we are using 34, especially if we go into the next month and draw it just like that. Now with that adjustment, so we are using 34 months of data versus 36. And the reason why I go back to this 34 is because it's one of the Fibonacci numbers, you know, 0, 0, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, and so on. So 34 clearly is part of the Fibonacci series number. So I think even though I usually use 3 months of data, I think this is the magic number, 34 months, because it gives you an indication sometimes earlier than the 36 months, and I think it's valid. Anyway, so here we are looking at gold. This is very early on in a potential comeback trade for gold. So moving to 3-year highs here might just suggest that this is where we start looking for entries. Maybe, maybe not. We just need to watch this for further evidence. And here we can use the monthly closing high of October for an entry, which should be somewhere around the highs of today, roughly. So let's call it at about 109. So 109 on the GLD, somewhere around there. 109.11 is the high. So if we can break out above that, maybe this becomes interesting because the RSI will be moving to fresh 3-year highs. And at the same time, we are looking at now the MACD. Pretty much we can say the MACD is breaking out to 3-year highs on gold. Now that means we have to really start paying attention here in case there's a big trade to be had. The last time, go back to the chart. Let's go back to gold itself, the gold ETF. That's the GLD, the ETF. Let's go to gold proper, gold index. And we can see the last time we had a move to 3-year highs was during this period here in 02, 03. And of course we know what happened after that. On hindsight, we moved from under 300 to 1900 in a couple of years. All this began somewhere here in 2000, 2003. And why was that important? It was important because at the beginning of that massive move, we moved to 3-year highs in 01. In fact, even so here in 01, the market moved to 3-year highs there on the RSI, and we can see that at the same time your MACDs moved to fresh 3-year highs, and so did the main MACD moving to fresh 3-year highs here. So all that happened in this time frame right there. All this moved to 3-year highs. So right now we are seeing the possibility of the same thing happening here with the market moving to 3-year highs. So in this current time, should it continue pressing higher, we need it to move a little bit higher to confirm that it is actually breaking out. You never know that this could be setting up for a move higher in gold. In fact, even if we take a look at the GDX, so the gold Miners ETF, and let's take a look at our 34-month setting. So in the 34-month setting, you can see that it is very close here to breaking out. Haven't yet, that's why I'm not jumping on the trade right now. It hasn't yet moved to 3-year highs, but it's what could. It could. It's not out of the realm of possibilities. And unfortunately here we are seeing, you know, even the MACD is not as bad, because the MACD, one can actually say, is making a 34-month high. And so something's taking place here that we just need to be watching this day to day to see when we can be part of any potential move. Let's take a look at a long-term monthly view for the gold trade here. Let's go back about I wonder how long GLD has been trading, or GDX. Let's go back. Okay, so we have all the data, and we don't see, actually the only thing I see here is an attempt to break out that failed here in 2001. Came back, tried to break out on the RSI. Remember, the RSI had already broken down here, and now we can draw this red line from the break. That break here was good enough to take it lower over time. So oops, coming back lower. So this here was confirmation of resistance at the highs in 2011, and since then, of course, we've seen the market drop. It needs to be pointed out here that this drop here, so 09, so 2012, or close enough here, we were moving to fresh 3-year lows. Moving to fresh 3-year lows here during this period, and of course we've seen that move to 3-year lows has led to this massive plunge. And also there's another move to 3-year lows here in 2013, which brought it off the highs there in the higher 30s, and we've gone to the lower double digits here. So anyway, what I'm trying to say is that if there's going to be a new change in direction that potentially takes this back to attempt to recapture some of these highs, maybe here, maybe here, maybe here, it's going to begin with the RSI moving to 3-year highs, and on the RSI on the MACD. So that's something we need to watch. Okay, let's take a look at UUP. If there's going to be a trade here for the dollar, a couple of things have to happen. GLD, or the dollar, needs to be cracking down. But if you take a look at the dollar, you see that there's no evidence of a major break, because we are pretty much sideways here, right? I mean, we're pretty much trading in this range since about May of 2015. So we've been trading in that general range. You can see the RSI hasn't broken down here on the weekly RSI, so there's really not a big change. Keep in mind that it is coming back to test the 50. If it holds the 50 in the next couple of week or so, if it bounces off the 50, then we can see that maybe gold is not primed to move higher, even though it seems like it is attracting people to the sector as of right now. We take a look at the daily, and the reason why I'm going through this is I'm trying to find evidence that yes, there's something materially going on here with the dollar and gold. If you draw a line connecting recent daily lows, take a look at where it's coming back to test it. It is coming back to test the line connecting the low. So again, we see another instant where the dollar is not broken, so I don't know whether that gold trade is going to work out. Maybe that gold trade is a fake. That could be my leaning right now. We can see here it's coming to test the 200-day moving average on the daily. Let's take a look at the hourly, because I noticed something on the hourly. If you take a look at a 3-month hourly and draw a line connecting the lows like that, it seems like we broke, right? That seems like a break of that trend line on the 3-month hourly. So that doesn't look good, even though we can see that it's coming back to test the lows of December. These lows are being tested. We are holding above that. Now, if I go to 6 months worth of data on the hourly, then I start seeing lots of supports, and I'll show that to you. If you take the ultimate lows in the 6-month time frame, the lows here through the lows here, you can see that it is coming back to support on that line. That could be a logical support area. Otherwise, you can take another level, which is to consider the lows from here through the lows of December and draw a straight line. You can see again we come in contact exactly where we are trading right now. So I personally lean to the fact that yes, gold could be in play, might be in play, but we haven't seen the ultimate breakout on the GLD and gold. It looks like it's an area we should really pay attention to in the coming weeks, maybe even months, for continued move, but I don't see the confirmation in my opinion yet. Now, I want to share with you some of the stocks that I've been just setting aside just to watch how they behave, because I think the stocks ultimately move faster than the indexes, and they might be setting up. If you take a look at ABX, this is pretty much a buy signal for this instrument, to be honest with you, because a move to 3-year highs, right? That's good. RSI moving to 3-year highs for the first time in many years, also about to move above zero. And man, this just looks perfect. If the GDX and gold can just add on to where they are trading, this is good to be, as what I'm trying to say here is, if you are going to be a neutral, this is a good move in ABX. I've been watching this over the last couple of weeks. It continues to trade higher, which means that maybe we are missing a trade here, maybe not, but we'll see. HMY, I've been watching this thing. It's moved from 50 cents all the way to $2 over the last couple of weeks and months. I've been tracking it, and every time I think it's about to pull back, it continues making new highs there on the RSI. So something could be taking place here, and that's why I say, because you would rather own leadership and just see how it takes you than try and find a bounce in stocks that are down. So here, moving to 3-year highs, is another stock that is looking great. If it was an instrument trading by itself, that's what you want to see. Instrument looks good. DRD, let's take a look at 34 months. And again, here we see the adjustment. This is 36 months. On the 36 months time scale, you can see that it is just now trying to break out. If we adjust this by 2 months and go to 34 months, take a look at the difference. You see for sure that the instrument has broken out. So that adjustment comes into play a lot. And here we can see that DRD is breaking out after moving from just about $1 now to $3. So that's almost a 3% return. DRD, you can see this nice explosion from here to here. Is this real? It could be. I'm not sure, but it really begs the question, and that's why we're doing the homework here, trying to figure out whether we should start, deploying some cash in this area. RIC, I was watching this even last year, during this last couple of years, during this period here, and even there's a breakout attempt here that failed in about last year, beginning of last year, this area here. Now we are seeing it coming back to make a 3-year high on the RSI, breaking out in price. It's another gold idea, GDX, miners trade, and the MACDs, at least the main MACDs, at 3-year highs. So really, lots of things taking place here. Let me just share 2 more. AKG, and AKGs go to the monthly. Alright, here on the monthly, it don't look great, but if gold is truly gonna break out, we can set an alert here at about $1.70, would be around that range, which is a recent monthly closing high, because if it breaks out here at that particular time, the RSI would also be making a move to 3-year highs, and the MACDs would be trading, if not already trading, at 3-year highs. So a breakout is what we need here. So this is the type of instrument you want to watch for future breakout above this resistance band here, which has been a problem for the stock going back. If you take a look at the resistance here, it's been failing to hold on a monthly closing basis. It's failed to hold above this level for quite some time, because there was a monthly closing high here, monthly closing high here, and then a monthly closing high here. So if it's to play out, it needs to be above that monthly closing high resistance. Keep in mind, the trade becomes live the moment it breaks out above, because I get that question a lot. Do we have to wait for the end of the month? No, you take the trade when it happens. So if it happens first day of the month, you take that trade whenever it happens. The hour, the minute it breaks out, that's when the trade is live. And so if we go back here, want to take a look at something I always consider is the long-term monthly view. Here, when the stock was moving, it moved from 50 cents all the way to $9.50. That's a huge return. So I know the stock has legs. You always want to go back and check long-term monthly view to see how they respond. Let's take a look at the other stocks we were watching previously. You always have to test and see. See, this one, I would not look to buy this, because even when gold was moving, it moved from $12 to $50. Looks like a good gain, but if you compare that with the GLD itself in that time period from 03 to, let's call it 2011. Take a look at how the GDX did. Here is 03 to 2011. It's pretty much a straight shot, a little bit of a serious drop here and then up to new highs. So you want to always make sure that the instrument you own had a great move when the conditions were right. Take a look at the other instrument we looked at, HMY. Again, see, I don't like this because while gold was moving higher to new highs in 2011, here gold was trading at substantially new highs. This stock was already making fresh lows. So that's one we can scratch off our list. Let's take a look at DRD. And when gold from 03, 01 moved, so gold itself, the chart looks like this. Picked in 2011 and then dropped. But this instrument picked in 2002. So here's another one to scratch off the list because it did not do well between 2003 to 2011 when gold was on fire. What makes you think if gold is on fire now, it's gonna do well? Also, something I do notice here, and I'm sure you can see that on the RSI, we are coming back to test the area where this stock has been struggling. Ever since the break here, this has become a trouble spot for the stock. Trouble spot here. So all these stocks, even though they look great on the 3-year time scale, funny thing is that when you look at them in comparison to the gold performance when gold was doing well, these stocks don't hold up very well. Let's take a look at RIC, long-term monthly view, and at least here we can see an instrument that did well. Did not do well between 03 and 07, right? Because gold by that time was making a new high. But since the lows of 09, it moved from $1 all the way to $13 when gold was doing well, and gold was making a good high in 2011. So this one is one we can watch because at least it had this nice move. Let's take a look at one more, which is the ticker symbol gold. So gold ticker symbol GOLD, and we can see here this one did well between 02 and 2011. This is what you want, a stock that when gold is doing well, it follows gold. And as of right now, on a 3-year monthly look, you can see that. In fact, let's go to 34 months because that's going to be clearer, or at least that's what we want. 34 months of data, and we can see that this is one that we can really start watching this because this one has traded well when gold was trading well. And we can also see that, so the RSI has a chance of breaking out to 3-year highs there, and right now we are looking at the MACDs also coming close to 3-year highs, so not quite ideal, but looks okay. One thing I have to notice here is, or have to observe here, is I just don't like the fact that this has been all over the place over the last 3 years. This is a sign of a shaky market. And the idea that it could be actually the next couple of months could be trading here is very real, because this has been the up and down kind of move over the last 3 years. So even though, yes, we are looking at gold, lots of questions, to be honest. And so, but we have to do our homework and always make sure we don't miss on a trade, because there could be a major move in gold that is setting up, and we want to be part of that trade. So for now, yes, markets are down. The general market is down. We're just looking for other ideas that could be breaking out in the same time period, and maybe gold is one that might go in the opposite direction of the market. Who knows? As a hedge, I'm not sure. We have to watch this, and the entire purpose of this video is just to take a look at how we do stock selection, irrespective of the market conditions. Something is always moving higher. Some sector, some theme is always breaking out. It is our job to find those themes. Before I go, let me take a look at one more that I did not mention, AEM, as a breakout candidate in the gold space. And again, we can see here, and you know what, to be very honest, maybe gold breaks out. Maybe these stocks are leading gold. I mean, that's a good breakout attempt on the RSI, MACDs at 3-year highs, so which means off the highs of 2011, this instrument is now starting to come back alive. And you can see here this one had a nice chance of trading well from the 04, 02, had a nice run and eventually picked in 2011, even though not substantially higher like gold did. So before we actually find the ideal candidate for playing the gold trade, we have to make sure that it did well when gold was doing well. So that's going to be one of our requirements. So if you take a look, let me conclude the video here by saying before we buy a stock in the gold trade, we have to make sure that it took advantage of this massive move. Pull back here in 08, but we want to make sure the stocks we own, if they were trading at the time, we want to make sure they took part of this massive move. Otherwise, you might own a gold stock when gold is moving higher and you end up not having a good return. Otherwise, maybe the best way to play this is to have some exposure in GLD itself. Eric Mwathe with Mwathe.com. As always, I'll keep you posted. Good luck, peace, and blessings. EACS.